Michael, we're a long way from 2%, and the Fed has said that, it would be potentially over 2% before it would actually move. It would have to be a symmetric target, that 2%. So do we get another rate increase this year?
Well, I think you do. I think it's a close call. Now, what Bill said was until there's evidence that inflation's moving back to 2, they likely will stay on the sideline for rate hikes. I agree with that, but I expect that there'll be some evidence in the inflation data over the next 3 to 4 prints that will suggest some of the recent weakness is largely behind us. I think it's a close call still for December, but whether you're looking out at that path, whether it's December or March, and you had mentioned in the lead-in, is it labor markets or is it inflation that will cue those hikes? I think it's certainly inflation. If inflation doesn't rebound, they're going to wait and they'll be patient. They'll wait to see for that to come back. But if we get a couple solid prints, I wouldn't be surprised if they go in December.
At what point do we begin to see real wage growth? So we got 2.5% year over year. We can't exactly complain, but at the same time, this 2.5% has not been doing it for inflation in the US economy. It hasn't been putting the workers back to work that aren't working enough or that might have been disillusioned. So what are we going to need to see wage growth wise before that inflation number kicks up?
Well, I would think that you should expect that over time, so again, let me just back up. Our view is you're going to see solid employment like we've been seeing for quite some time, and the unemployment rate is going to continue to move lower. I would be surprised if we didn't get 3 to 3.5% wage growth by the end of this cycle. We're obviously not seeing that now, and it's been a bit of a surprise relative to our forecast. It's not all bad news, though. I mean, why equity markets are responding so well to this report is you can get income growth from a variety of sources. You can add more people to the labor market, you can make them work more hours, and you can pay them more. And certainly the labor market's been really consistent in adding employment and keeping hours elevated. That means a lot of income growth at an aggregate level. Nominal income growth is running about 5.5% or greater right now. So that still means good consumption growth, good economic activity, but you're right, the key has been why the lack of wage growth. And I think you can point to a variety of factors: soft inflation, soft productivity, nominal wage rigidity, all of these things that I think are playing an important role.